Hello everyone, welcome to the channel. So this video is going to be fun because the topic for the video is the strategy rules, and it's always good to talk about rules. And let's go. Before we start, I want to mention I thought my way of delivering the content was bad or is bad, having a white presentation like it's a classroom. So I put some efforts and I did, yeah, as I said, I put some efforts and I moved it from bad to worse, and you will know why. So let's get started. So as you can see, I made it colorful using ChatGPT, and ChatGPT added its bits, which I really hate. But let's go to the rule number one, which is the universe of stocks that I will be trading for this trend following strategy. Before we get the rule, the name of the strategy, it's basically the system one of the turtle traders, which I don't know if they had a proper name for this. It's given as 2010, and then there was one more 5520, same concept, a different time frame. So yeah, I'm still thinking what could be the name, because it's not the original strategy. There are bets where, yeah, slightly here and there the rules are maybe I'll come up with some name and update the video later, but video title later. But let's go with 2010 for now. The first rule is the universe, and the universe is Nifty 100, and yeah, you can see some no small caps. The creativity of ChatGPT, which is useless. So let's go to the second rule, the entry of the entry rule for the strategy. So as you say, as the name suggests, 2010. What we're trying to do here is buy 20-day breakout on the upside, and at the same time, sell 10-day breakout to the downside. And since I'm doing only long only, and you can only do long only in India unless you're doing derivatives, so the idea would be go back 20 days from now, find out the high, and if today's close is breaking out than the previous 20 closes, you come tomorrow and enter the stock. Slight deviation from the original turtle trader principles. So they traded this mostly on futures then, and also they did not wait for the close. They were looking for the high. So if an instrument broke 20 days highest high, they would enter, and same on the downside, lowest low, they would look for the lowest low, not the lowest close. So I'm basing it on the close because it's much more stable for me, and I'm more comfortable with closing prices. It's just my personal bias. So yeah, that's the entry rule. You go back 20 days. So at the end of the video, we'll go see in the real charts how a trade would run for this. So just keep just have some patience, and we'll get to that. Yeah, this is the entry rule. Let's go to the exit. As I said, you go back 10 days in the past, and if the close of today is less than the lowest close of the last 10 days, you come tomorrow and exit. So that's pretty simple. And then again, you can see the creativity, and the chat decides, not me. The next rule is the important one. Ideally, I would like to have 20 stocks but this is going to be an experiment, mostly to build the trend following psychology. I'm keeping it because my capital for this strategy will be not more than 5 lakhs, so I don't want to dilute, take trades. So yeah, it's still peanuts for many of us, or many of the people, at least not me at the moment. So 5 lakhs distributed across 10 stocks, so that means 50,000 for each stocks. Again, there is a small deviation. The original turtle trader principle says that the position size is volatility adjusted. So for example, if within the 100 stocks of Nifty, there are some 10 wild stocks which are high beta, they make wild moves, and basically you adjust and don't give too much allocation to them. So that's the original philosophy, and I want to keep things simpler, so I chose equal weight. Again, it's a bias where I'm comfortable with. That would also mean that my strategy would be comprising of more and more volatile stocks, which is fine for me. So yeah, that's about the position size. The last one, again, it's a deviation. It's not really a rule, but it's a deviation again from the original system, where the turtle traders would add to the winning positions. So it's called pyramiding, and for me, yeah, I don't have any pyramiding, and I keep with my initial allocation, and then I just say, yeah, I just keep quiet. One or two things I think I missed in the presentation. No matter the capital size, let's say I entered 2 stocks and I made some losses, and now obviously the capital would be less than 5 lakh, but I will make sure that each entry gets the same amount, not more. If there are some winning stocks, I make some profits and the capital goes to 5,50,000. I'm not going to add another 1,000 for, or how much is it? 50,000 divided by, yeah, it's 5,000 somewhere. So I'm not going to add, I'm not going to allocate 55,000 for the next trades. So I'm going to keep it constant, simple, 50,000 per stock, and that will be, yeah, same for throughout the year. And things could evolve, and I will keep you informed if they evolve. Now let's go to a chart and see how a real trade would look like. Let's go. All right, so TCS is, in my view, because it was the first company that came in my magic formula. So I will also show how the holding is doing. I hadn't seen it in a while because it doesn't matter for 1 year what it's doing. But let's come back to the this particular strategy. Let's say we start on this day. What would we do? So we count back 20 days. So I'm going to automate it. So it's the only way you can track 20 100 stocks. So I'll make another engaging video for the algo. I'll take you through the logic. It's not complex, so it's going to be simple. So you start here, go back 20 days and mark the high. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Clearly it's somewhere here. So you mark that. So the close is somewhere here, and you have the high. And as and when you don't find breakouts, you are the high of last 20-day close is going to roll down if there are no higher highs being made. So where did we start? I guess we started here. Yeah, it's too difficult, so I'll make it again. So let's say we came, so this was the highest high. Then if you count, forward 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So at this day, the highest high is, it's a mess. So at that particular time, the highest high would then, highest close would be shifted here, because then this becomes the, so you see when the stock keeps going down, the anchor of your last 20 highest close is going to go down, and you eventually want to catch it from there. It's similar to the 20% flipper. Yeah, it may still make sense but for now I've chosen to go with this, so let's stick to this. So the idea is pretty much similar. It's not time based. This is time based, and that was mostly on the price action based. It was 20% of the stock movement, and the universe was 500 then. So we come here, and then of course we go forward 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. At this stage, then again the things come here, but already we have last 20 days, there is a high here. So this you keep, this is your new high. And it's not crossing, and let me check if I have some markers here. I'm not a technician. I'm very bad with these drawings, so excuse me. Annotation, okay, so I can make something. That's good. So let's come here. So the last high was somewhere, we came till the point here. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So the high is not broken. You keep, and then the stock keeps dipping. So again we come here. Let me move this. The highest high is somewhere here. If I go 20 days in the future, it's not breaking. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's okay. Here I think the things are little looking interesting, because you have so many lower days. Let's see if this is anyway not breaking this, and it's good. Now once you come down here, your highest highs moved here, then here, you're somewhere here now, and there is a breakout for sure, but is it within the 20 days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, of course, definitely. So here is your entry, the entry candle. Let me try to mark it. Okay, draw. What was it? Annotation. Yeah. So you make an entry on this candle. I hope it stays. Okay, good. Then you made the entry, and then now you're looking for lowest low or the lowest close for 10 days. So yes, stock is moving, and I don't think it just closed below 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So lowest low is somewhere here. So did not break it. So it went on to make higher highs, which is good and rare for a trend following system. Then eventually the stock started coming down, and let's put a line to see if it is breaking here already in this candle. Yeah, I think so. Let me check. So you have a close here, and if I go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the 10 days low was slightly this is the low, and it has clearly broken it, and you exit somewhere here. So the open of this entry, and since you're entering the next day, so I will have to move it slightly, so you enter somewhere here. So I will move it to the entry or closer to entry, because I'm making the entry somewhere in about 9:30, 9:45 a.m. in the morning. So yeah, I would stay closer to the open position, or probably even higher, because yeah, I may have gotten a worse entry, but that's not the point. So let me delete one of these. We know that now this was the exit signal, and eventually we exit on the open of the next day. So oh my God. Okay, so you exit here. So that's it. It was painful in the manual charts to count back and forward. I hope you could follow it. If you have any questions, just don't hesitate to put it in the comment section. What else? So yeah, it made a profit, and profitable trades are rare in trend following. I'm expecting probability of profit somewhere between 30 to 40%. So out of 10 trades, I know that 7 will be losing, and 2 to 3 would be winning, and I'm betting those wins will be big ones. So here it's a small one. It seems like a small one. I don't know. It has made about 200, 300 points. 320. 320. It's not a bad trade. I guess about near to 10%, which is not so bad, but not so great either for the amount of losses that I'm going to take. That's it on the strategy. So yeah, any questions, drop the questions. As I promised, let's go. What's my magic formula babies are doing? So they're green, doesn't matter. I may lose all of it, so in 1 year. Right, that's it. Thank you.